All right, guys, welcome to another video. This is Stamps FX, and in this video we're going to examine EURUSD for the week of March, let's get this out the way, 14th through the 19th. All right, so what we have on the chart is we have EURUSD. This is a daily chart. This is my trading view chart here. The first thing we do is we mark the high and the low on the chart. As you can see, we already have that down here. This is the low. And then we mark the high of the chart, which is right here. And also make sure you guys zoom this chart in. So I have, let's see, the oldest date I have on here is April 2019. We want all the way up through the current day. We don't want it this big. We miss important key information when it's this big. So this is, let's say, September of 2020 all the way over to today. We don't want it that way, because if we did it this way, this is a daily chart. If we did it this way, we would lose key information that we need and key levels. So you want to be careful trading on your phone as well, because that can mess you up. And the trick to trading with your phone is how they get you is they only show you maybe this little piece of the chart right here. Or they may show you this, maybe start from here, because if we started from here and drew a line straight up, it may give us a different picture than using these points down here. But anyway, we mark the low and the high on the chart. And then from there, we look for the channels. Here's a smaller channel right here. As you can see, price bounced up in this area right here. It broke through, then began kind of trading in this little area right here. Then it broke out and started trading here. But notice when it got here, it went up, came down, but it failed to go back up. And then it broke back into this area right here. So it did catch this trend line right here, as you notice, but we also use this point to draw this trend line, but it stopped here and then bounced back up. So the question is it going to come down and then go back up, or is it going to begin trading in this area again and potentially come back down and retest this level? Now, one of the things that you can use to determine that is if this lower trend line right here, which is drawn by this collection of candles way back in May of 2020. If you can draw another trend line or an inner trend line, usually what happens when you have this that looks like this, it breaks through this area right here and retest either this lower trend line or one of these support levels. So what we're going to do is trade this and anticipate that this will do something like this. Short position, because we are short. I think I already had this on the chart. All right, so we would enter here and then we would carry it down right to this lower level here, but it may not reach that level. So we can back it up just a little bit, because a lot of people like to jump out before it gets all the way down. And then for this, we want our stop to be slightly above this area right here. But in terms of risk to reward ratio, you want at least a 1-to-1. A lot of people like to do a ratio of 2-to-1. But the problem with this is people are going to anticipate this going down and they're going to jump on board. The market makers will try to spike this up and knock these people out of the market. So if we were putting on the trade right here, I would probably do something like this. Okay. If you're patient enough, you can get it, because you want your stop loss to be above this point right here, because it could spike up. So you could wait possibly till it pulls back and then get in to carry this down here. But chances are you can miss the move entirely. So we don't want to do that. What we want to do is just place our stop slightly above the highest point, give it a little bit of room to move, and then this right here, enter the trade. And then we can, once we enter the trade and it starts to move down, if it breaks this level right here, then at that point we can begin watching it to see if it is going to continue breaking these levels. And we can also use a trailing stop to kind of trail the market down as it goes down, because it could get as low as this point right here. Because notice back here, This is one of the areas, one of the key areas right here. So it could get somewhere in here and break this, and it could go all the way down. And if you look, that's 500, over 500 pips right here. All right, so that's our analysis. We are bearish over the next few days for this, at least over the next 2 weeks. We're looking for a move down into this area, and you guys make sure that you guys trade with caution. Also, if you haven't subscribed, please subscribe to the channel and like this video. And then we're going to create another video right after this one. I will be analyzing this chart right here, GBP JPY. This is an old published thing that we did. So we'll be removing this and then analyzing this. And what's weird about this, I did this a long time ago. You can go on you can follow me on TradingView. It's Stamps FX. And you will, if you hit the play button, you'll notice that this came down right here. You did have the spike here to knock out all of these short sellers. But we'll talk about this in the next video. But if you look at these levels that I created a long time ago, you can see price is still respecting these levels. Look at this. Still respecting these levels. Broke out, back up to this level. Broke out, back up to some other level that we haven't marked yet. So anyway, be sure to check the next video out. And again, thank you guys so much for watching. And I hope you subscribe and like the video. Talk to you soon.